We are watching Wall Street, where the closing bell rang just moments ago. So the Dow in the green today as investors react to the news. The Federal Reserve will hold interest rates steady for now. So let's take a look at our interactive stock market heat map. This is brought to you by FinViz. So it's showing the top 500 stocks in real time. The red indicating the stock is down. The green, as you see, means it's up. Now, the size of the box, it represents the market cap. Federal Reserve Chair Jerome Powell talked about what President Trump's tariffs mean for the inflation fight. So let's take a listen.
I do think with the arrival of the tariff inflation, further progress may be delayed. The S&P doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos in 26 and then down to 2 by 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
Let's bring in CBS News business analyst Jill Schlesinger to talk about what this so-called delay means for Americans who are hoping for some inflation relief. So, yeah, let's talk about the word delay.
Yeah, not a great word. We're not good with delayed gratification either. So the delay here is really about Jerome Powell saying to us, hey, gang, we've got these tariffs. They've come online. We have the retaliation. And we're really unsure how those tariffs are going to change prices over the near term. But what the Fed does seem to feel confident about is that inflation will stay higher for most of this year. And that's where he says, gosh, I'd like there to be some progress. We just don't anticipate it. Just remember, every other word it felt like in that press conference was uncertain. So when they project about what they think is going to happen, it's all uncertain because we just don't know how these tariffs are going to filter through the overall economy, the labor market, and as well as the inflation rate.
So our own CBS News Money Watch correspondent Kelly O'Grady was in the room for that news briefing. She asked the Fed chair a question about consumer sentiment. So let's take a listen to that question.
Thanks for taking our questions, Chair Powell. Kelly O'Grady, CBS News. So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is their grocery bill.
Okay, so a couple things. The grocery bill is about past inflation, really. There was inflation in 21, 2, and 3, and prices went up. The current level, it's not the change in prices. It's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things. So I think that is the fundamental fact, and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got 2% growth, and it's a pretty good economy. But people are unhappy because of the price level, and we completely understand and accept that.
All right, Jill, first of all, I love that question because Americans are curious about their grocery bill. We want instant gratification, but you are fluent in the language of the Fed. So why don't you tell us what stands out to you here?
I have a very handy Fed decoder ring. And what I think Federal Reserve Chair Jerome Powell wanted to say is, Kelly, I wish you didn't ask me that, because that's a really good question. It's hard for me to tell people not to freak out about what happened in the past. But what he said underneath it also is kind of interesting to me, because what he's saying is, hey, you know what? Inflation was really high, and that pushed prices up. And now we are not going to see prices come down. That's deflation. All he's saying is we want the rate of increase to start to come down. So for a consumer, I don't think that makes you feel much better. And I think that the idea that tariffs could add to the inflation rate makes us feel uneasy. And you know what? As human beings, not only do we not like to be patient, but we don't like uncertainty. And since there is so much uncertainty, I think the real issue that the Fed is going to have to grapple with is if consumers feel anxious and uncertain, they may change the way they spend money. And if that's the case, that is when feelings translate into negative economic data. And that is what the Fed has to keep their eyes on next.
Great explainer. Jill, thank you so much. And we'll certainly be checking in with you. Appreciate it.